Joining us now is Ajay Rajadhyaksha. He's Managing Director and Head of U.S. Fixed Income at Barclays Capital. Ajay, there's been a lot to digest over the past 24 hours, as I was talking about. I mean, what does this tell us about what's going to happen to U.S. debt? Are we just going to continue to see these yields move further and further lower?
No, I think what it tells us is that rates are going to be range-bound for a while. The 10-year yield that you mentioned, we were at 2.50, 2.5% not so many weeks ago. And then, as it seemed like economic conditions were not as bad as feared, rates started to rise, yields started to rise, bond prices started to come down. And over the last 2 days, like you mentioned, Julie, we have simply retraced that. But quite honestly, data is mediocre. It's not weak enough, in our opinion, to justify a much bigger move lower in yields over the next few months.
Now, obviously the elections are coming up, but what about especially the Larry Summers coming vacancy at the White House? What does that do in terms of economic outlook? Is that something that you are factoring in, or are you paying more attention to the data right now?
Right now, I'm paying far more attention to the data. One change in the administration's economic team really doesn't have a big impact on policy and thereby on bond yields, for that matter, or the economy. What would make a difference to investors' perceptions about how things are going is obviously what happens in the November 2nd elections, whether one party or other has the mandate to push things through. And that, I think, is something that even as investors, even as analysts, we do have to take into account.
All right, Ajay, we're going to have to leave it there for right now.